Well, discount chain Dollar General starts trading on the New York Stock Exchange today under the ticker DG. It priced, though, at the low end of its range. Here to look at the particulars of the offering is analyst Nicholas Einhorn of Renaissance Capital, which focuses solely on IPO. So, Nick, good morning.
Good morning.
So what do you think of the rollout here? It did price at the end of the range here, or lower end of the range?
Yeah, I think what we saw was the valuation was just a little bit aggressive at the midpoint of the range. And we're seeing a market where IPO investors are being very selective about the stocks they invest in and where they want to put the valuation.
So you're not surprised then on the valuation?
I don't think so. It was valued at a premium to Walmart and Target and those peers. It still is at the even at the low end of the range. So
let's talk about that valuation. $7.2 billion. That's almost 27 times reported earnings. That's a 77% premium to Walmart. I mean, does that make sense?
I think it does to some extent because it has outgrown most of its peers over the last year. Since the private equity firms, KKR and Goldman and Citi bought it in 2007, it's boosted same-store sales, upped margins. So if you look at it more from a forward perspective, the valuation makes more sense.
Right.
But it is still a little aggressive, and it is baking in a lot of further growth. I
mean, so the right time for Dollar General to make its, or go back being a public company, I mean, considering the retail environment, the economic environment?
Well, I think they're sort of interesting for a retailer because they have to some extent benefited from the economic weakness. You know, they are a discount chain, obviously, right. So they have grown very strongly over the last year and a half. And I think, you know, the market has only recently opened up for large private equity companies, but we're still early enough in the recovery, if it's even started yet, that this company should still benefit from you know, strapped consumers looking for value.
But it still has also at the same time a pretty huge debt burden. If I recall, it's more than $4 billion in long-term borrowing. So I'm assuming, I mean, can it manage that debt burden in your view? I
think it can. It has been a pretty consistent performer. Right. It's had 20 years of positive same-store sales growth. But of course, it does cut into earnings, and it is, you know, it is something the company's going to have to manage well.
You know, you brought up the point that we haven't seen a lot of IPO offerings. No surprise in this financial crisis. You know, you didn't see a lot of new companies being brought to market publicly. It's the fifth, though, IPO in November. Is that just a short-term blip here right now, or are you starting to see kind of the beginning of a trend here in terms of the IPO market?
What we've really seen since the beginning of September is the market has opened up, especially for private equity-backed companies, larger, more mature companies. So a lot of the backers are looking to take advantage of that window just in case it ends up closing, and a lot of them have been sitting on these large companies in their portfolios for a while and have been looking to monetize them.
So not surprising to start seeing kind of an uptick.
Right.
Is still a buyer's market, not a seller's market?
I think so. Investors are being very picky, and a lot of the recent IPOs haven't done that well. The FTSE Renaissance IPO Index, which we use to track IPO activity, outperformed at the beginning of the year as IPOs were valued at big discounts, but more recently it's been in line. So it's really a mixed performance right now.
Let me ask you, Nick, so in just a few minutes, 12 minutes, it'll make its debut back here in trading. So $21 each. What kind of reception are you anticipating? Do you expect this stock to see quite a pop here at the open?
I wouldn't expect so, given that it priced to the low end of the range. Investors are clearly, you know, not loving the valuation. Right. I think it, you know, it is a very strong company. It has shown that over the last few years, and it has improved its financials recently. The question will really be how much investors think that's sustainable over the near to long term.
Right, all about the outlook here.
Right.
All right, Nick, going to leave it on that note. Thank you so much.
You're welcome.
Nick Einhorn, analyst over at Renaissance Capital.